All right, in this video today, I'm going to be sharing with all those part-time traders out there that are interested in trading the future markets and you're ready to make the shift, say possibly to going full-time and making money. All right. So let's say you have a small account and you're limited with funds and you've been, back testing and forward testing, demo and simulation, and now you're ready to go live, right? Start trading with your own money. You've already set up your own personal brokerage account with one of, maybe the regulated brokers out there like NinjaTrader, Amp Futures, and there's a list of other ones out there, TraderVate. You have interactive brokers. So maybe you've already established all that and you have everything into the works now. And you've proven to yourself that you have a strategy, or you've been watching this channel here and you learn the strategy when it comes to multi-chart confluence. Basically, looking for, first and foremost, the direction of the market, getting that right. And then secondly, marking up your higher base zone and then scaling down to a lower base chart to find a zone within the zone approach, okay? If you're not quite sure what I'm talking about, please spend some time watching the videos from this video going backwards. And, I go with plenty of content surrounding the strategy as a whole. Now, let's say you have a small account size of only $1,000. Is there a way in which you can actually trade it and grow that account from 30 days to 60 days and moving forward? Okay, you can actually shift from trading the micro futures to full-on trading the E-mini futures. I would say you could do it within 30 days, but definitely within 60 days if you truly know what you're doing. Now, the size difference or the tick value difference when it comes to trading the micros versus the E-minis. Okay, so the tick value for the micros is only 50 cents a tick versus this is for the NASDAQ now, versus the E-mini NASDAQ 100 futures, which is actually $5 a tick. And then, you could go to whoever your broker is and look at, say, for example, the contract specifications, look at the margins. That will give you the rundown on the detailed information that you actually need to know surrounding these various contracts or future markets. Okay, so and let's say that you are right now, like I said, you're part-time. All right, you've maybe trading a couple days a week. You have a full-time job, but now you want to start making a certain dollar amount. You have a goal in mind. You want to start making some additional income and growing that to where you can start to position yourself to do this full-time, from your own personal living environment. All right, so it's pretty simple to do, but let's look at some math right quick. Let's say we have that $1,000 magical number, right? I'm trying to show you right quick, and we're looking at the micros now because you can't trade the E-minis trading with just $1,000. So typically speaking, if you go for like a 10-point run, all right, or I should say each time, or just go for a full-on 20-point move, okay, you can make money in doing this. Now, I would say please do not over leverage your account. I would say stay within that 5 to 6%. In that area there, you really don't want to be risking more than that. I'm going to say that now. So with $1,000, we have a stop loss or risk management threshold of $60, okay? So basically that's going to be, say on 10 points, right? Times 4 ticks. That's 4 ticks in every point, 40 ticks. Times 0.5, which is the tick value, that is going to be $20 stop. That's with one contract though, but we're willing to risk up to what? $60. So we can trade up to basically 3 contracts times 3. That's $60. So if we go for 1-to-1, we're looking to risk $60 as our stop, which is 10 points, and go for say $60 as profit, or go for 1-to-2, and you can make have a $60 stop and $120 a profit target area. Okay, so let's say we want to do that, and let's say we're looking to make $120 a day. Okay, that's just basically trading one trade, okay, at 3 contracts on the micro futures now. All right, NASDAQ. So times 5, okay, that's going to give you $600 a week, and basically just times that times 4 on average. That's additional $2,400 a month. Okay, that's if you're trading 3 contracts, 1 trade a day, picking up 20 points, okay, because we're going for 1-to-2. Our risk is 10. We're going for 20 points. Again, stop loss is 60. We're going for $120 on the day. You can do that. Plus, let's say now that's your profit at the end of the month, $2,400, but you still have that $1,000 you have in your account, so that puts you up to $3,400. Okay, $3,400. And if you do the same thing the second month, okay, 60 days, then again, now your account has went from, let's say, you just double that, okay, 3,400 times 2. All right, now you're up $6,800, almost $7,000. So let's say roughly around or averaging about $7,000 in those next 60 days. Granted, you don't have any big losses, but you're really risking only a small amount of capital to be able, 6%, okay, $60 a trade, all right, on $1,000. So worst case scenario, if you blew $1,000, guys, and you weren't able to trade correctly, then we know that's not a lot of money, but it could be for some people because $1,000 maybe all you have been able to save. So you want to be very frugal in the way that you actually trade it and be very wise with the way you trade this as well. But you can definitely do this. So let's go over the numbers one more time. Okay, the stop is going to be 10. Okay, 10 points times 4, that's 40 ticks, right? 40 ticks times the tick value is 5, so that's $20 a contract. And let's say again we want to risk 6% of our account. So times 3 contracts is going to be 60 bucks. That's going to be 3%. 6% of our account. And then we want to go for 120, which is basically double the stop loss. So if we're willing to risk 60, we want to make 120. 120 times 5, that's $600. 6 times 4, that's $2,400. You can do the math on that. You do that the same thing the very next month, or if you want to step it up and trade an additional contract, yeah, that's going to put you over that $7,000 mark. Granted, again, that you're keeping your losses very small, and you are able to stay on that path of making $2,400 a month. Yeah, you may have a losing trade here and there, but you can just make it back up, all right, and be smart about doing so. So we're just looking at what you can actually make. I'm not saying it's concrete. I may say $2,400, but you may make $1,500 at the end of the month. Still, you made an additional $1,500, all right, if you had some losses, plus the $1,000 you had put in. So you took your account from $1,000 to $2,500, and let's say the second month, you do that just as well. Then you went from $2,500 up to $5,000 in 2 months. It's definitely doable if you are risking wisely in what you're doing with your money. So again, this is a way in which you can, let's say you're trading part-time and you only have $1,000, you can grow that and you can start to shift slowly as your account size grow, and you can go from trading part-time to making a full-time income is what I'm trying to say. Now, the strategy is very simple, guys. If you watch the video content, you'll pick up on a lot of what I'm talking about, especially from this video going back. If you really want to dive deep into the meat and potatoes of everything, you may want to become an elite channel supporter. Remember, the link is down in the description portion of the video. It's only $6.99 a month. That's where you get all the trade breakdown videos that I posted into that private community. As if you're sitting right next to me, I'll walk you through those setups, because market structure is key into everything that you actually do. You have to understand the structure of the market if you really want to make money and surviving in this business and making money. So there are, I don't even know the number of trade breakdown videos, but the purpose of the videos is to walk you through these setups so that you can grasp an understanding where to place your stop loss, where to place your profit target, understanding structure and what structure looks like for each one of these trades. These are trades that I posted over on our Discord community, okay? Posted there. I go back and I break them down for our elite channel supporters. So the link is down in the description. Once you click that link, make sure to choose the second tier for $6.99 a month. If you break that down, that's like 24 to 25 cents on the day. That's all it is, okay? It's helped plenty of people out there. If you don't believe me, come on to the Discord. The Discord is free. Link is in the description, and you can ask some of those individuals as well, okay? But again, we're talking about a very, very small amount of money, of only $6.99. It's up to you. I can't guarantee anything because everybody sees things differently than, the next person. So you have to fully understand the strategy. All the strategy is basically is just, I'll show you a quick example right here. Let's go to the 120. Choose a higher base chart to start with, okay? But before you do all that, understand what the market is doing, okay? So if we are, say for example, bearish, let me squeeze this together right quick. We're bearish, making lower lows and lower highs to the downside and breaking structure consistently to the downside, then you should only be looking for key pullbacks to key areas of, supply. All right. So that's if we're moving to the downside. So for example, right here, market's making lows, lower highs, lows, lower highs, lows, breaking structure, pulling back, breaking more structure when we break below that area there. This is the key area of supply right here. Why aggressive selling? Now the key, or one of the most critical pieces to the puzzle in how I trade, is that yes, I always want to see a breaker structure. Number one. Okay. Secondly, you got to have an aggressive area buying or selling where there is a imbalance or gap resting back at the zone. That is extremely important. In this case right here, there was a very small imbalance resting back at this supply zone right here where we broke this area structure. And then if I start scaling down to my lower base chart, so we start off with the higher base chart depicting the direction of the market. You got the breaker structure. The market pulls back to a 120 range supply zone. That's the chart I'm using as my highest base chart to identify structure, to mark off my first either supply or demand zone, whether it's aggressive selling or buying. In this case here, it's a supply area. Then I'm moving down to my 60 and then down to my 24 range, but chart on the NASDAQ. So when I scale down to the 60, here is the area of supply right here on the 60 range, and then moving down to the 24, to identify another zone on the inside. But what that's given us is areas of confluence on the charts, okay, by gradually stepping down from one chart to the next. And that's the thing about what makes trading high probability, is being able to, and not just that, the success rate increases when you have more confluence. The high probability piece is where you have imbalances or gaps resting back at the actual zone. In this case here, there's a small imbalance resting right back at the 120 zone, right here, back at the 60 range zone, and if I move down to 24 and so forth, okay? So that's what I'm trying to tell you. The strategy, it's a great strategy for beginner traders, especially for all traders and all, for all traders, to be honest with you. But it's just a very simplistic way of being able to tap into and find multiple levels of confluence by stepping from one chart down to the next. That's basically taking a scale down approach, all right? So you're looking for a zone within a zone, and what that does is it gives you more confluence layered up on top of each other. So hopefully that makes sense, all right? But that's how I do it. So whatever charts you start, you trade from, whether it's tick, volume, time, I'm gonna tell you right now, range-based charts are calculated differently than time, tick, and volume. So you're not going to find where a time-based chart is, comparable in comparison to a range chart. They are calculated differently. You have to understand that. So if you're looking to say, hey, what's a 5-minute chart, equivalent to the charts you're looking at, there's not, because time-based charts are calculated based on time, and range-based charts are basically calculated on the amount of volume coming into the actual market, all right? So that's what I wanted to cover in today's video, was just for anyone out there who's looking to turn trading from a part-time standpoint to a full-time basis, but basically starting off with a small account size, or with just $1,000, okay? You can grow, over a period of time, you can grow that account by basically scalping or trading the NASDAQ futures, say for example, and just, again, being very cautious about the trades you're taking, looking for high probability setups, and just scalping for, $120 a day. Okay, it adds up. All right, you don't have to go in and be sitting there trying to make $1,000 a day. And you're definitely not going to do that with trading, such a small account to start off with. In time, gradually, as your account size grows, then your goals may shift. You may want to start making more money. You may want to start trading more contracts. But again, start off small and let the account grow. All right. But that's all I had today. I just want to share with you guys. I appreciate everyone that tunes in on a daily basis and watches the video content. Thank you for doing so. Hopefully everyone is having a successful week so far in this trading week. I believe we have one more day, maybe a day and a half left Thursday. I'm not sure if it's an early close on Friday, but yeah, that's pretty much it. If you want to join the Discord, the link is down below. If you want to become an elite member, the link is down below. For all those who are not currently subscribed, please take the time to go ahead and sub by clicking on the subscribe button down below. Make sure to turn your post notifications on so you do not miss any of the uploaded content here on the channel. And last but not least, if you could do me the biggest favor, see that little thumbs up button, the like button, please go ahead and smack it. Click on it right now. I appreciate it. I'll see everyone in the next trading video. Take care.